She's a fintech specialist, and she will tell us how NFTs are used to finance real-world assets on-chain. Welcome on stage. Here's the lovely Romina Bungert.
I'm excited to tell you a bit about what we have been building with NFTs. And basically, this powerful token standard can do much more than just building profile pictures or avatars, but it has an actual or can provide an actual impact in the real world. And that's, in our case, with the borrowing and lending use case. So what does Centrifuge actually do? In blockchain language, we would say we do DeFi for real-world assets. And let me explain how we do decentralized asset finance with NFTs. Our mission is to provide access to fair finance for everyone and cutting out intermediaries. Our audience is actually small and medium-sized enterprises that we want to help finance their projects in the real world. The problem today is that they don't actually have cheap access to capital to finance their activities with their local banks. They would get super high interest rates, and actually their creditworthiness is often underestimated. As we can see, they actually don't have so much higher default rates than larger companies. And here's actually the potential that when you can serve those players with capital that hasn't been able to access private debt before, you can generate yield for investors and growth financing for real-world companies. So what we actually want to do with this is bring the whole credit ecosystem on-chain. And here, this little illustration should help you understand how we use NFTs in that context. So as I mentioned, we are pooling capital together. So we have liquidity pools on the Centrifuge protocol. And in these pools, basically, the asset originators come with their assets. So let's say we have an online newspaper. They want to finance their invoices from their advertisers. These are basically the assets that you see above the NFTs. They get collateralized or securitized through like real-world SPVs, and they get a digital representation, which is the NFT, and the collateral in the pool. And then we have different types of capital providers that can then access these pools with their liquidity. And this could be, for example, institutional investors that maybe haven't been financing these assets before because usually banks would have done that. Or crypto native investors, let's say a crypto venture capital fund that is specialized in crypto and has some credit expertise, or also, let's say, a stable coin that needs to collateralize, and so that, you have to create a very stable currency means it needs stable yields or stable assets behind. And maybe you have observed that with the recent market turbulences in crypto, but also in equities markets, you have to cut out the volatility. So these are basically the audiences that you could imagine could find our pools interesting. And here I want to show you a bit how we break this down and how those real-world companies can basically get the money on chain. This is like often the critical question. So how does the cryptocurrency actually help them if you're not a crypto-native company? And that is basically that the issuer of the asset basically comes to us and brings their bundle of assets. So it's not single assets that say we don't finance a single car or a single house, but they would come with like a bundle of different assets. And we basically are the teams that work and support Centrifuge are experts in underwriting and credit products. They screen those documents, they help them and support them with the securitization process. And basically all those documents that are related to the security are represented then on chain and in the NFT. And basically then the issuer puts the NFT that he mints in this process and locks it in the pool. And there basically he can draw down the financing that represents the value of his NFT. And maybe to help make this more understandable, let's look at the case study that I just mentioned, an online advertisement, invoice financing. If you would have an online newspaper, that would be our issuers, and they would bring like the bundles of their invoices. Let's say they bring 100 invoices that represent $100 each. Then basically we have our NFTs that includes the receivable data that is worth $10,000, and they basically then get for all the sum of these receivables the financing. So, but how does this risk management actually work, and how can we make sure that the loan providers or the lenders actually get their money back? And this is basically that we structure an SPV that will basically give the investors full recourse right in the real world. And we do have risk tranching to also serve for different appetites. So risk tranching is a concept that is very established in traditional financial markets and asset-backed securities. And this is what we also use here. So we have a senior note and a junior note. And basically the concept is the junior note protects the senior note from the risk. So they take the first loss and protect and take the defaults. And in this in this illustration, you can also see how many different intermediaries or middlemen are involved usually in the real world. Let's say if we just structure asset-backed securities. But if we automate all these different activities with our protocol that has a built-in self-executing waterfall, we basically can reduce the costs. We can make the workflow much more lean and efficient. So on the time and also on the cost scale, we can really add value for the asset originator. So yeah, asset-backed securities on chain, maybe here in another illustration that can show you a bit how this works. So our investors basically access the pools also with stable coins. So we don't have like a speculative cryptocurrency that you would have to bring to take out the risk. So it's basically always an equivalent to a real world currency. In our case, it's the US dollar. We use the stable coin DAI. That's the yellow little sign that you can see. That's a representative for that. We have, for those mentioned risk tranches, we have different tokens. So the one token for the junior tranche and one token for the senior tranche. And basically, for the deposit that is in the pool, basically every investor then exchanges the token for the stable coins that he invests. So I think this is a really high impact solution. And our goal is to bring this market that is huge in the real world on chain and at least reach 1 billion of total value locked in our pools. And maybe here also to speak about some metrics, why it's so interesting and high impact, and maybe why we shouldn't always look for crazy yields, because this is clearly not what we want to do with Centrifuge, with bringing real-world assets on chain. We don't want to sell imaginary castles. We want to bring stability to portfolios, especially of smaller investors that can't take high risks or high defaults. And we also like how rapidly the blockchain market or the DeFi market has been growing in the last years. But when the macro environment shifted and the turbulences started to hit, basically all the investors took the risky capital out because of the super high volatility and the unpredictability. But our businesses are actually have underlying cash flows that you can really use in your valuations. So it's not an imaginary valuation behind it, but actual stable projects with stable yields for investors. And that's how we were also able to navigate quite well through the last months and turbulences. We basically saw minimal redemptions. We have been growing throughout the last year. Different to the rest of the market. Our mission is to bring those high quality assets to many, many portfolios in the blockchain environment, on chain, but hopefully we can also, with this technology that is very efficient and can bring also yields and income to every normal investor, help them also come on chain. So thank you for your attention. I will be around if you have any questions, just approach me.